looking at in terms of currencies and elsewhere, with a focus on some data points. And to do that, we are joined by Pete McGuire from XM. Pete, a very good afternoon to you. I hope you had a good day thus far. Just taking a look at the Aussie dollar. So what did you see from that move there? We got consumer confidence this morning, but a reiteration from the Reserve Bank just as far as the possibility of more rate hikes to come.
Yes, good afternoon, Andrew. Well, I think it's taken everyone by a little bit of surprise, but I think that's the reality of the matter. And we were at 67.1. I mean, I made some notes and I thought we were on a little bit of an upward trend, or 67.05. I thought there was some more legs in it, and then all of a sudden it's come under a bit of pressure. If you're looking over the last 4 months, we put our mind back to really the start of Feb. It's been range bound and there's been very little excitement for the Aussie. They're in that channel, very tight, while a lot of the other currencies have performed incredibly well with big volatility swings. So the Aussie's been, languishing, just to give it the best description, I think.
Yeah, well, perhaps maybe a better data point was the release of those the Chinese data that we got too. Yep. So we're obviously concerned just as far as weakness in China and how that's going to impact Australia.
Well, exactly right. We're conscious of it and we're taking on board as far as energy consumption and, the numbers coming out of there. One thing that took me by a bit of surprise, I speaking with some colleagues on a chat to Dubai the other day, and the numbers coming out of North and Western Australia, Port Hedland, were the strongest ever. I think March as far as export numbers for iron ore. So it's very, very strong demand. You can't say it's not. But from what they're turning that ore into at the moment, it seems to be stockpiling. So we've just got to wait and see how that moves forward and whether we're going to see demand on the other side globally start to increase. So that's the dilemma, but we'll just have to wait and see.
Pete, elsewhere, data out of the US. So we did have the latest manufacturing read, certainly from the Empire State for New York State. That surprised, actually, falling much more than anticipated there. Signs of further weakness emerging in the US economy. We've also got retail sales to look forward to.
Yeah, we have the retail sales. Everyone's got their mind on, and that's really going to give us a pretty good indication how they're tracking. And the Empire report, as you mentioned, I think that really shook quite a lot of traders and a bit of a reality check. So we've just got to, strap ourselves in. We're halfway through this quarter, and maybe, maybe, Andrew, the consumer out the States, they're a big consumption base. Maybe that we're going to have a relatively strong northern hemisphere summer. We'll just have to wait and see. They've put that behind it. Maybe we're going to see increase as far as domestic travel. They've got a relatively, fairly strong US dollar to travel with. So we've just got to see how they perform from retail sales perspectives and, consumption across the whole of Main Street USA.
Peter, of course, the other huge issue in the States at the moment are these negotiations over the debt ceiling. Everyone would be shocked if they didn't find some sort of resolution before the end of the month. However,
100%.
There is that prospect that they could default. How are you looking at it, and particularly the way it's likely to play out for the US dollar?
Well, Andrew, we've just got to see how Speaker McCarthy and how he moves forward with President Biden and how their talks materialise over the next 2 weeks and whether they've got a deal done or it's still sitting on the post. How that transpires to US dollar, I think, would shake the foundations of it a little bit to the downside. I wouldn't be surprised to see it come under selling pressure, and maybe you're going to see that US dollar index back under 100. So we're currently at 102.30, 102.40, and I think that'd knock a lot of the wind out of it. So we'll just have to wait and see. I mean, it's a big consideration. And when was the last time? About 2011, I think, under the Obama administration. And they shut all the national parks for a while, so we've just got to wait and see how it all moves.
Yeah, just see how close they'll take it. Pete, elsewhere, you're also watching those elections in Turkey, which are obviously a close-run thing.
Yeah, absolutely. I mean, Erdogan, we're not sure whether he's, he didn't get up, and we're not sure how it moves forward in the sense of who's going to get over the post. It's 2 weeks' time. Again, what happens as far as the lira. There's it's a mixed bag. I mean, you're nearly 50-50 as far as each side. So we'll see who gets the winner's flag in 2 weeks' time. Also, you've got to understand which I'm sure you do, the Thailand situation with an election also. So we've had a fairly busy weekend across from a political standpoint, and the impact that has to currencies, of course.
And elsewhere, Pete, Japan's topics set for its highest level in 3 decades. The equity market over there has been quite something to behold. What are you watching for over there? What's driving that? And I guess more broadly, just as far as the economy, because we do have some data coming our way this week.
Yeah, well, Governor Ueda, he came into the party in the sense of being governor that sometime in April. So he sat on his hands. We've just got to see, they've got data drops this week in Japan, and whether we see any chance of ratcheting up of rates, while the rest of the world, or the US and probably Eurozone are maybe at the end of the rate tightening cycle. Japan hasn't come out of the blocks. So we've just got to see how that all transpires. And you couldn't get in the road of a bull market. What the Nikkei's done, and as you mentioned, the topics, they've been outstanding performers. And I vividly recall 89 at 39,000 points for the Nikkei, and then it crashed to 8,000. So here it is nearly at 30,000. Talk about reversals.
Yeah, absolutely. It's fascinating to see how that's going to play out. And I guess, particularly ahead of that data that we're likely to see out of Japan at the same time. Hey, just quickly, Pete, anything to speak of in commodities complex at the moment? What are you watching?
Well, gold, Andrew, was 2022, 2021. It's been all over the shop, and it's been incredibly volatile for about the last 8 or 9 sessions. I still think that it's more upside yet, and so I'm waiting to see. And if they don't get that debt situation as far as the ceiling wrapped up, and there's uncertainty, I think gold will go for a fairly good run. So that's that's just an observation. I'm not tipping anything, but that makes sense to me. And the other side of it, of course, is crude's come under big pressure to the downside, and now it's had a bit of a bounce. So yeah, it's wild and woolly, and they're dynamic markets to trade. And I would have thought that you'll have more upside for crude over this northern hemisphere summer with more consumption.